The next panel discussion aims at providing information about the insurance industry and the changes that technology is bringing about in it. It's called Disruption in Insurance Value Chain, the role of InsurTech. May I invite the panelists for this session, Ms. Lata Iyer, Chief Operating Officer of Bharti AXA Life Insurance. Yes, ma'am. Mr. Girish Nayak, Chief of Operations and Technology, ICICI Lombard. Mr. Varun Dua, co-founder of CoverFox. And Mr. Shwetank Sharma, Director, Collab Open Innovation, MetLife Insurance. Our moderator for this session is Mr. Shashwat Sharma, Partner and Managing Consultant, KPMG. And Mr. Thompson Thomas from HDFC Life, Senior Vice President. Can we have you on stage? Mr. Sharma, you have 35 minutes.
Yeah, good evening, ladies and gentlemen. So we come to the last session of the day, and perhaps the most important one. Those of you who are in the room are truly privileged to be here in the room because we have a very distinguished panel. And what's very interesting is we're talking about disruption in the insurance sector. And I'll just start with a quote with the CEO of one of the largest insurance companies in the world. I won't take the name because it might offend that CEO that I quoted him in this panel. He says, insurance companies are living in the Stone Age. We are completely prehistoric. We have no idea about the customer who is of today's generation and what the customer needs. This is said by us. You can Google it and find out who said this, but that's the starting point. So, in terms of disruptions, insurance sector, if we see from technology perspective, across the last 10 years, if you look at industries which have been completely disrupted, so two models have pretty much emerged in the new economy and in the digital space. One is obviously on-demand immediate access. So Netflix has completely disrupted video rentals. I mean, very few people, I think I'm one of the few people who still buys DVDs or wants to rent them because the films I watch, unfortunately, are not always streamed on Netflix and Hotstar. Amazon completely disrupted the books, e-commerce from Amazon, right? So pretty much a lot of disruptors came in different industries. Airbnb in hotels, right? Which says that everything is a service. Uber came and disrupted transportation industry. But not a single example has come right now in the entire financial services. And obviously, critics say that insurance is the least. So while Uber and Airbnb and Netflix and Amazon have disrupted industries completely, no one has done it yet to that extent across financial services, and insurance seems to be the least disrupted. So that's just the background, and we're going to check with the panel whether whatever I'm saying doesn't make sense, or just saying that, it's too late in the day and I'm generally trying to bully them at night. But that's something which is all from a lot of research done, all the statement I'm making. The other very interesting point is that most of the millennials, if you talk to them, who are using an Uber, who are using Airbnb or are streaming Netflix, or even in some extent looking at investment advice online or using payments online, believe that insurance companies are not that relevant to them. And the reasons they say is, look, I'm too young, I can't afford to buy a house, so why do I need a householder insurance? I can't afford a car, do I need a car insurance? Life insurance, I even thought about it, right? And most of the people in India are not, as the youngsters still don't understand what is the lifetime value and what they should seek protection for. So, and this is across the world, a lot of youngsters don't believe insurance is relevant. So that's the big challenge which the insurance industry is grappling with at a worldwide level. Obviously, we've seen, so this is what we are seeing has not worked so well. But what has worked well is that a lot of elements of the value chain of insurance companies have actually seen disruptors coming and focusing on specific aspects. So if I look at a traditional insurance value chain, which says right from discovering to exploring, to trying to say, how do I select the right product? How do I apply? How do I then get my underwriting done? And then finally, how do I have the customer serve the claims? Specific elements have seen the advent of specific business models, and there are good alliance and partnership model emerging, where people are saying, can I significantly look at data which is everywhere and all pervasive and use that to maybe smoothen the application process. Or in some economies, in fact, the two most advanced, or maybe two most advanced economies in some of the new models after the US, interestingly, are China and Israel. And a lot of new models have emerged there. I mean, we have got peer-to-peer models emerging, which are like traditional models, but now coming up in a very big way. We've seen also some of the other models emerge on-demand insurance. So today, one of the big, I mean, the darling of the insurtech world, Zhong'an from China, I mean, has a fantastic app which says airline delay insurance. So as your flight is getting late and it doesn't land on time, you get the coupon on your phone that go use it. Your flight is late by 2 hours, buy yourself a gift. So I think these are some of the on-demand models coming in, but like I said, not too much has happened in a lot of the countries. Also, what is very interesting is a lot of global players are investing heavily in some of these models. And we're seeing both emergence of B2B and B2C. So if you look at a lot of the reinsurance companies talking about how they can use blockchain to transfer risk. If you look at even B2C models, which are emerging in terms of how do you look at cybersecurity, how do you look at new risks arising out of the crime and skimming. Also, we are seeing insurance being bundled. So these are some of the key trends. We have got, and so global players are investing in this big time. So let's start the discussion with Shwetang. He comes, he's sitting on the extreme left. So he comes with experience from the Asian market. And obviously, the Asian economy has been roaring for the last 25 odd years. In fact, since the manufacturing boom happened in the 60s, since then, Asian economies have really leapfrog. So Shwetang, let me begin by asking you in terms of the changing customers. While obviously traditional customer segments in most of the markets in Asia are people who are a little bit affluent, have some asset ownership. How do you see, and Asia has, and especially countries like China and other parts of Southeast Asia, where you have a very young demographic just like India, how are you seeing some of the models of partnership emerging between insurance companies and some of the startups in Asia?
Sure, thanks, Shashwat. So you're right. I mean, Asia's seen a prolonged boom. And for that matter, you know, most of demand for this century is going to come from Asia. At one of MetLife's sort of core tenets is the Asiafication of demand. And, you know, 68% of the new middle class worldwide will be created in Asia over the next sort of 15, 20 years. So it's imperative to understand how to approach these customers, and that's where the traditional disruption really comes. So most of most of the life insurance, I can talk more about life insurance. Some of the PNC world is slightly different, but most of the life insurers are still stuck in an agent-first world. So agent, whether that's your typical agent who sort of is an individual or banker channels or any of these, they're still driving the vast majority of sales. But today's millennials, today's new age customers want faster channels, want slicker customer experience, mobile first. So some of the interesting startups that we've seen at the Asia level are Bima, which is working with a bunch of insurers, has a wonderful mobile platform, very friction-free experience of buying life insurance. It almost gets bundled into your airtime, so you don't even feel the pinch of paying a premium. I know micro insurers working with AXA here in India. That's another interesting platform. We work with a company called Democrants, which again allows us to distribute insurance over mobile. I want to pick up on one point you also mentioned about millennials don't want to sort of deal with life insurance and the thought of saving and investing. I'm not sure that's 100% true. They don't want to deal with it in a very structured or heavy-handed manner. But one of the most successful startups has been something called the Society of Grown-ups. And it's all about creating this scenario and creating this sort of approach that you are a grown-up. You need to take ownership of your life. You need to do what's called adulting in the millennial world. And this has raised $100 million in the US. And it's built around a fundamental understanding of how millennials want to interact with their savings, which is really technology first, fantastic customer experience, and limited human interaction.
Okay, no, I think that's a great point. So let me just, since we're just on life insurance, let me just move from the left to the right to Thompson. So Thompson, he made a very good point in terms of saying that, look, millennials want to engage, but in a different fashion. They want to use technology. And that's the point he made. Now, if I look at this new model which is emerging,